Joining us again with his take on the markets is Art Hogan, Chief Market Strategist at Wunderlich Securities. Good morning, Art.
Good morning.
Go Patriots, by the way. I know you're happy this morning. You were probably up late last night.
Absolutely.
Investors appear to be turning more cautious as Trump's full week as president begins today, first full week. Why is that?
Well, I think he had such a massive move post the election. I think you saw the financials rip about 20%. A lot of the mid-cycle industrials, as seen as a infrastructure play. So all sorts of moves that probably got stretched. You certainly saw a sell-off of the bond surrogates, and I think that continues throughout 2017. I think what we really get to focus on, which is great over the next couple of weeks, is earnings. And the fourth quarter earnings certainly appear as though they will be much better than the third quarter was. And I think that should be our focus right now, because understanding we do have a president that's promised a lot of pro-growth and pro-business initiatives, that's going to take some time. So it's good to have a firm footing and strong fundamentals underneath this market while you're waiting to see what the new president can actually get put into place.
A little clarification, Art, on a note you sent us this morning that talked about the fact that you saw selling for bonds for 2017, selling for bonds and buying of technology and financials. Are those two groups you like for 2017?
Yeah, very much so. So I think you're going to see a bit of that rotation we've talked about for years, right? So, the end of a 30, 35-year bond bull market probably is upon us. Now, that's going to happen very gradually, but we've seen part of that. The yield on the 10-year certainly moving up from 1.5 to 2.42 here this morning. But I think in general, the bond proxies in a rising interest rate environment also need to be sold to the utilities, the staples, the telecoms, et cetera. And I certainly think that the lagging sectors, that haven't participated as much in the run-up so far and probably have a great 2017 in front of them, will be technology, software as a service, security software, human capital management software companies. And certainly, I continue to think energy is going to have a great year, but I think financials probably stands out as the one sector you can count on in 2017 to do much better than they have over the last couple of years.
Do you think that Donald Trump's pro-business policies can actually work in economic reality?
I think they can. I think that what you have to juxtapose is what he'd like to put forward with what can be paid for. So I think that's where the border adjustment tax is going to be the sticky wicket in this whole process. If we can get away from that and get something accomplished without that piece of the puzzle, I think we'd have a great opportunity for some real growth in 2017.
We got a lot in there. Art Hogan, thank you for joining us this morning, Chief Market Strategist at Wunderlich Securities.